Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it daily, asking ourselves one question: what happened today? What does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little there. You can subscribe to it. I also do a show on a weekly basis, Sunday evenings, so you can catch that one where we look at the intermediate term time frame and doing the same sort of analysis. Not always right, but pretty good record. As far as today, we were wrong though, because it looked to me like last night we were going to see this market push lower, but that is not what happened, and the big spike up was in the NASDAQ, in the NDX. Those were the spikers. Got big help here out of biotech. Biotech had a huge day up. That was a big part of it. As you can see elsewhere, not that much. And if we look at when we look at the charts here, you'll see what I mean. This market's still range bound, still thrashing, but it didn't get that follow through to the downside despite the signals that we got yesterday, which kind of puts me on pause, because when I look at a market and I see what it's trying to tell me, and I make that expectation. If it doesn't do that, then either the market's not quite telling the truth or I'm wrong, and usually it's the latter. So when that happens, I tell myself and I tell you and I tell my subscribers that not what we think it is. We need to give this a chance to describe what it really wants to do a little bit more. So the short-term trade really didn't work out. I tried to trade it short today. Ended up 2 times trying to do it, and both times I didn't make anything off of it. Actually, lost a little bit. Gold market was down. We had the Fed minutes out today. Silver and gold both. Bonds were pretty much flat, and the dollar gained some strength. I want to talk about these things and the market in general and put it in context, and that is that the Fed minutes came out today. Those Fed minutes, if you read them, I can't see them as anything other than hawkish. And what we saw intraday is we saw a spike down shortly after them. We saw a spike down in the currencies. They gained some of that back at the end. The dollar spiked up, of course. That put the hit on gold, put the hit on the bonds, but then both of them kind of turned around a little bit. Gold not as much, but the bonds did, and the currencies as well. And is it just folks reading into it what they want to read into it, or is it something else? And I think it might be something else, and we'll talk about that towards the end of the show. But let's take a look at the actual trades here today, and the charts, and see what we think. So if we took a look here at the charts, the S&P, what you actually have here is you pushed up, right? You didn't quite get to the highs, but you did get under yesterday's lows. You had more volume, yet you couldn't stay down. Now that's a little bit of an aberration, especially after we got the failure yesterday. So in my mind, I'm saying, okay, let's see what this really wants to do on another day or two of trading. We had earnings tonight. Let's pop over and after the commercial here, let's pop over and look at some of those. But before we do that, let's look at a couple more of these indexes. Here's the strong ones today. Now these are the ones you really have to watch, because now that they're starting to push again, they were the strongest to start with. Remember, the NASDAQ composite never has even came back to test that swing point high. That's how strong it is. What does it do today? It pushes up. That prior high on the first bounce, 49.48. This thing gets up to 49.56, closes at 50.82, so it's over it. That says it can go up here and hit this resistance zone and try to get to the top of the breakdown bar. So NASDAQ trying to set up to go a little bit higher. And I know most people don't count these as ABCD structures, but I do. I mean, if they're there, they're there. I don't know why people want to say, oh, if it's more than 67%, pullback, or 62.8, right, or whatever their numbers are. Well, it's an ABCD structure, right? It went up, went back down, it didn't go lower, and now it's trying to go up again. So it's just not going to tack on that much, just like it didn't go down. It didn't, hold up very well. It's just weak, right? And it's more of the kind of thrashing stuff we've seen. So this one actually prints positive today. That's the NASDAQ composite, the broader composite. If we look at the NDX itself, not quite there, so you can see it didn't get over the high. It is back into the resistance zone though, and that will be its test tomorrow. If we look at the Russell, now the Russell still can't get to that high, that breakdown bar's high. 1265.85, today it got to 1264.13. It looks to me like it's going to try one more time. I'm going to do it tomorrow, and we'll see if it gets there and gets over it. If this gets over it, folks, you know, that's kind of a heads up that this market's going to try to run higher again. And hard as it is to believe, that is what it's trying to do. ABCD structure on this one is there. It would take it to new highs, right? It would take it just past it. So this one's still set up to try to pop over that top. And what would be, you know, the most bearish situation is if it actually, you know, popped over the top, right, with a bar like that, and then closed back down underneath it. That would be the most bearish case, right? You go up, you finish off your ABCD structure, and then you pull back, right, and close back underneath this bar somewhere. Don't know that that's going to happen, but, you know, just laying out the possibilities of what could take place. That's the indexes. Let's come right back, look at some of these earnings and some of the sectors, and then later let's talk a little bit about what's probably making this market really move. Be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
So as we come back here with earnings season just around the corner, you know, officially kicked off with Alcoa today, it's going to be important to see the reactions this week, next week, in particular next week, because you don't get that much just today and tomorrow, a few names. We actually had 6 names tonight. 2 of them were flat, 2 of them were up, 2 were down. Alcoa, one of the ones being down, this one dropped 3.5% after the bell, 13.19. Brings it back down into here. Yeah, this can, you know, come back down, test support. But, you know, if you look at Alcoa, Alcoa's been hit pretty bad for a long run up, right? And it's just drifting back down again. If we move over to the other one that was up tonight, that was down tonight, that was Bed Bath & Beyond. If we look at that one, Bed Bath & Beyond, you know, it gets hit. It was up today, got hit. So what is it, down 3.5%, through 74.89. So trading back down into here. Again, just coming back into these big bars, it looks like. Now, this is an interesting one, because if I pull this to a monthly, this thing has been hit on every earnings the past 2, and now they're going to get hit again tomorrow, or at least it looks that way. How long can you distribute up here at the highs, right? Everybody wants to have this in their portfolio. It's been such a perennial winner for so long, but they're struggling, and it keeps showing up in the earnings, yet they keep buying them back and bring them right back to the highs. Part of that's financial engineering, but part of that is just portfolio managers, you know, wanting it in their portfolio. I'll be very curious to see how this one trades after, you know, usually 2-3 losing quarters is enough to actually start changing the tide. So I'll be curious to see if this one does that. The other one, Apogee, which is building materials, they were up 7% after the bell. Let me see, this traded at 49. So it came right up to and over the highs. And let's see what the weekly looks like. It's going to go over the highs. and looks pretty good. And that's, it's in a good sector right now. The other one that was up was Pure Imports and Pure One. Now they took a big hit. Looks like, I'm not sure what that was on. It looks like it was probably earnings as well. And climbed back up into the gap. Now they're going to get a push back up. Let me see. They closed at 1324 after the bell. I don't see that going too far, so that one doesn't look that interesting. The other two that were flat, beverages, which was Constellation Brands, and this one is a nice winner at the highs, and looks like it's just gonna hold there. The other one is WD-40, which is a specialty chemical company, and that one traded flat as well, and that also looks okay. So earnings so far, the ones that I would expect would get hit are going to get hit. If I had to guess, I would have thought the aluminum and Bed Bath and Beyond. I didn't know so much about Pure. I thought Apogee would do fine. So no big surprises there. I got a couple more names in the morning we'll look at, but nothing major here. The major stuff today really was the fact that they couldn't sell down the Fed after the Fed said, hey, we're more pessimistic, not pessimistic, we're more hawkish than you think, right? We still have it on the June time frame potentially, and believe me, this market isn't priced for a June time frame rate increase. Here's the dollar. Remember now, the dollar came down, did a face save right at the end of the day on what was that, Monday, right? Or I guess, yeah, it was Monday. And then flips around, big spike up yesterday, tries to trade lower today, but ends up closing higher. This thing's in a range trade, and as long as it's in a range trade, it's not going to drive the market mad. It's holding that range, that higher range, and it's kind of in the middle of the range at this point. It looks to me like it is going to try to work itself up to this breakdown bar, and that would probably be the place that one would want to lighten up if you're long this thing, or potentially see it break out. But I suspect it's going to consolidate for a while longer. So that's the dollar. The other big thing today was oil. Oil got smacked back down on a huge production increase out of Saudi and inventory buildup. This market's going nowhere, and people that are trying to play this, yeah, it's giving you nice big moves every day, but you better be on the right side of them. The other story today was the bonds. The bonds try to trade off again, and they end up hanging. This does appear is putting in an ABCD structure to take it higher again. And we've seen this over and over in this bond market where it just can't sell down and stay down, right? We had this sell down was the only one we've had for the last couple of years. You got an ABCD structure here that it fulfilled. Now you have another one, right, that's setting up to take it up and go back up here to test into this bar again, the bottom of it. So bonds setting up to go higher. If bonds are going higher, usually the market doesn't go with them, but that will be something to watch. Gold tried to trade off today, but actually didn't end up that bad. It was down, but not terribly. Silver looked a lot worse. And then carrying out that UUP, here's the FXE. FXE is going to try to come back into the bottom of this bar. That will be the test, 104.25. If it can't hold there, folks, this thing's going to par. Now, my guess is, being the opposite of the dollar, this thing is probably going to consolidate longer. But right now, the trend is down on this, and it's just a question of how long it consolidates. Does it consolidate this far and it breaks here? Or, does it go farther out? I don't know. All I know is that I don't want to be long the euro. If I'm going to be something, I'm going to be short. Let's see here. Anything else on the ox markets? That's really it. Actually, there is one more piece which kind of leads into what we were talking about before, is emerging markets. These things are on fire, and a lot of this has to do with the Far East, which we're going to look at here next. But breaks out, right? Breaks out, volume expanding. This is a great looking chart, and right now, if you just take it at face value, and I know it's hard to do because this thing gaps all over the place. It really trades off Asia, well, elsewhere, but Asia also. But it trades off markets that trade outside our hours was the point. This thing That's a huge ABCD structure to the upside if in fact it fulfills. So that's the EEM. If I go look at the sectors real quick, and then we'll pop into the final thoughts here. The sectors today, it was really the biotechs that led this thing. Biotechs tacked on 3% almost, right? Nice big spike up. They want to go test that breakdown bar as well. And so that will be the test as they come back up. But if you look at almost everything else, and actually there was a face save again on the IYT, it popped around, closed back up, and you saw this kind of takeaway bars. Even though these bars were small, they were all takeaway bars from yesterday's decline at the end of the day. But every one of these, if you look at them, and I'll just go to the SOX next, every one of these flip around, they do the same sort of thing, and they're all just kind of range trading, thrashing back and forth. Really no rhyme or reason as to what is happening, or at least that's what it looks like. But let's talk about that as we come back here with the final thoughts. So as we come back here for the final thoughts, this is what it's really all about, right? It's about the Fed. It's about central bankers. It's about central bankers around the world, easy money policy that keeps fueling asset gains. We've seen it repeatedly now for 3.5, 4 years, and it, at some point it will end. And actually, this is what's being talked about here. When to hike interest rates? Well, some of them are still talking about June meeting. Now, the first thing I believe that happened today is they said, oh, well, that was before things were what they are now. So in other words, these minutes from the March meeting, now that we're 2 weeks later, things have changed. That's how people were talking about it. I don't know if it's changed that much. The Fed keeps talking about this, and the market keeps acting like it's December or next year. Maybe the market's going to be surprised. Maybe it is going to be June. Maybe they're going to raise them in June just to show the market they can do it. I don't know. But what I do know is that economically we're not really doing that well, and that's what everybody keeps looking at and saying that's why the Fed's not going to do it. So anyway, that's the hike on interest rates. So that hawkish, right? When would it be confident, or when they would be reasonably confident inflation is heading to 2%, they said there's no easy formula. So they didn't really give anything away there. And then something else that came up that we haven't talked about at all is selling the assets. They got like $4 trillion on their books. All this crap they bought for the last 3.5 years still on the books. And it's not coming off. Every time this stuff comes up, the mortgage-backed securities, they don't even plan to sell them. They just plan to let them expire and mature. And those are, long-term notes. The shorter-term stuff that they have with Treasury securities, both on the short end and on the longer end, they've got them laddered across the spectrum. They just keep rolling them over. So every time, some of them come due, they just take that coupon, flip it back around, buy another one. So when are we going to take these off? That was the question. And they said, hey, we don't know that we're going to do it anytime soon. When we do it, we'll kind of do it at our own pace, and there's not going to be any special pace to it. I don't know that that was unexpected. So I would say the only thing that came out of this today was this, and it got dismissed. So what's really driving this market? What's really driving this market right now is asset appreciation in the rest of the world. We've already seen it in Europe. We saw a big run up in December in Chinese market, Shanghai in particular, right, in Hong Kong. Now, Hang Seng takes off, big volume last night. They actually printed the volume for me. Volumes are getting very spotty on all of these world markets, unfortunately, so I can't really, do the normal analysis I would, but they come back after vacation and they spike this thing 3.5, almost 4%. Big volume, right? Shoots over the highs. This wants to go higher. And if you look at anything in the Chinese market, whether it's this, whether you look at the 8 shares, whether you come in here and you pull up like the FCHI, which everybody likes to trade, any of these, right? All huge spikes up. This one gained 6% today. Is it the case that our markets are being held up by the rest of the world? Is the equation really that simple? Is that what's really happening? The more I thought about it, or have thought about it over the last week or so, and certainly with today's reaction, I'm starting to think that is the case, that is what we're seeing, that our markets cannot fall as long as the rest of the world is pushing higher. Now, it used to be that the equity markets in the U.S. would move the rest of the world. Maybe that's slowly being taken away. Maybe the economic puzzle is different in that the U.S. isn't so absolute anymore. And, if that's the case, then it's even more important that we're able to analyze and do analyze world markets, not just the U.S. markets. Well, we'll see if it plays out that way. I'm coming to the conclusion that this U.S. market can't fall if the rest of the world wants to go higher. At least that's the way they're treating it. Now, I know that the rest of the world's a little bit more volatile than us, so when they start getting herky-jerky up and down, we'll see how that affects us. But right now, that seems to be the case. Nobody wants to leave this market. Buyers disappear at the tops, but they sure as heck, the sellers don't show up at the bottoms. And right now, that means you're just range trading back and forth without any direction, looking for the next catalyst, something here in the U.S. markets to tell us what's next. And right now, because we don't have that, earnings next week, this market just keeps thrashing back and forth, waiting on the next catalyst and being held up basically by the power of the world. Folks, thanks for joining me. Have yourself a great night. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great night, and we'll see how this works tomorrow. Looks to me like we're just going to thrash more. Take care. Good night.